How many of you have heard of Jordan Belfort? Yes, the Wolf of Wall Street. Many of you, I'm assuming. But have you heard about Navinder Singh Sarao, the Hound of Hounslow, the online futures trader who had earned tens of millions of dollars from his very own bedroom? Sarao was arrested in 2015 for his part in the 2010 flash crash, an event that sent shockwaves through financial markets. Sarao's journey to riches was unusual. Born in modest London suburb to immigrants, he first heard of trading from one of his housemates, who he noticed always had money. Now, his hunger for money got him hooked to reading, and he read everything he could find on financial theory and the markets. Sarao landed up a job with a low-rent financial firm. Just few years of joining office, he was pulling down $25,000 on a good day. There was a drastic uptick in his earnings, tens of millions every day, when he eventually went solo, trading E-mini futures, a contract that tracks the S&P 500. Now, Sarao had autism spectrum disorder Asperger's syndrome. And according to his defense team, he saw beating the markets like winning a video game. But he made his fortune mainly by artificially manipulating the stock market. It all started with his concern about high-frequency trading. For those unaware, it is a trading strategy that uses powerful computers and complex algorithms to ensure a large number of trades very quickly, often in just milli or microseconds. The speed allowed large moneyed firms to beat others to a trade, thereby securing a better price. Irked at the unfairness, he started engaging in spoofing. He hired software developers to write programs that would allow him to place millions of dollars worth of orders. Then, after other traders had reacted to his potential trade, Sarao would abruptly cancel his order. Now, this allowed him to drive the market higher or lower and reap the benefits. This brings us to 6th of May 2010. It was a day of furious trading for Sarao. According to reports, in the final 2 hours before he logged off that day, he bought and sold over 62,000 E-mini contracts, the combined value of which stood at $3.4 billion. As expected, its effect rippled into financial markets not only in the US, but worldwide. For instance, the S&P shed 5% of its value, all in just 4 minutes. In about the same time frame, the Dow lost 9%. These are just a few of the indices that took a historic hit before rebounding around half an hour later. Now, in that brief time, shares worth $1 trillion were wiped off the market. After his arrest, he was extradited to the US. Sarao pleaded guilty to 1 count of electronic fraud and 1 count of spoofing, which is illegal in the US. He initially faced 22 charges, which carried a maximum sentence of 380 years. But prosecutors took into account his autism, time already served in jail, and the help he provided to the US government. Sarao was sentenced to 1 year of house arrest. He also paid the government $12.8 million, the amount that prosecutors said he earned from illegal trading. While the US government contends that he was partially responsible for the flash crash, several financial experts disagree, and they see him as a Robin Hood of the stock market, whose actions only hurt wealthy companies.